Hi, my name is Vlad Karpel, and I'm the founder of Tradespoon. And today I'd like to talk about new segment that we have on our tool time segment called VIX Time. We're really excited about this new segment that we are starting today, and we're going to talk about volatility and VIX in general. Today we have a special guest, Deming from the Equity Armor Group. Dan, are you there? Can you hear me?
I am, Vlad. I'm here.
Great. Thanks for being with us today, and I want to kick off today with just a little background about you and the Equity Armor Group, as well as how the Armor Group uses volatility in your funds. Maybe you can give us your take on this.
Sure, absolutely, Vlad. Well, basically, I've been in the volatility space for the better part of 6 years now, and was on the floor of the CBOE for 20 plus years, trading various products, the OEX, the SPX, and then went into the VIX in 2008. And I joined up with Brian Stutland, and at the time it was Stutland Equities and Stutland Volatility Group. And now we've kind of morphed it into a volatility-based type of strategies that we use for managed accounts, as well as we sub-advise to some funds as well, the KKM Armor funds, which are vol-based funds. And we've used our experience from being in the VIX and being market makers in the VIX for basically since the inception. And then kind of move that off the floor and to search for efficient ways to own volatility and incorporate it into a portfolio like a sleeve in an equity portfolio.
This is great. So now that the market has been trading in the increased volatility, we've seen some sell-off, maybe 2 to 3% last week, and today market open on expansion of volatility. What are your thoughts on this week and next week as we approaching the earnings season and implied volatility is increasing?
Yeah, I mean, there's a lot going on right now, Vlad. It's actually, you're seeing a significant increase in what we call realized volatility, basically what the market has experienced over the course of the last couple of days. And you're seeing that kind of now transfer into the VIX, or what is expected or implied volatility, which looks 30 days into the future, basically measures the option prices on the SPX, 30 days out, as far as what the value of all those options are, and it comes up with an implied measure of what the market expects kind of on a movement basis. So what we're seeing right now is we're kind of seeing a rollout of September. Like you said, significant pickup in vol expectations. We saw the VIX trade up to 1708 this morning when it was on its lows earlier this morning. Now we saw a rally in the SPX midday, and now we're seeing some more selling pressure as we move towards the second half of the day. So it'll be interesting to see if we can see the VIX push back towards those highs of 1708, which is the most recent high in the VIX. As far as the activity we're seeing some pretty big activity in the VIX options as well. And another measure that we look very closely at when you talk about volatility is what is called the VVIX, which is a measure of VIX volatility, and we're seeing that up significantly as well. So you see a lot of activity in the VIX where you have a lot of call buyers coming in looking to protect against the possibility of further downside, Vlad.
No, thank you. This is a great insight. And let's say for our portfolio, for our users, if you manage average retail account is $50,000, $20,000, or $50,000. Do you have maybe a specific trade in mind of, if you want to hedge, maybe, if the market has beyond 5% correction, how would a retail investor be able to hedge their portfolio? Do you have maybe a specific trade?
It just depends. And like I said, we search for like efficient ways to own volatility because, that's kind of, there's so many different volatility type products out there right now. But as a smaller player in the marketplace, right now, I think, you could look for a couple different ways. Looking at, there's SPY is this, like the smaller version of the SPX. You could certainly look at SPY put spreads as a possibility to kind of hedge out some of your long market exposure, maybe take advantage of some of the volatility pickup. If we see volatility pickup, that typically means the market's probably headed lower, at least short term. So that's one possible play. Also in the VIX options as well. Now you could look at call spreads and whatnot in the VIX options. But I think, from a retail standpoint, I would like to get into more detail about how to maybe strategize some of those things. But for simple ways right now, you could look at maybe buying a call in the VIX possibly, or look at buying a put or a put spread in the SPY to hedge out some of your long market exposure. Those are a couple possibilities.
Dan, this is a great insights, and we really appreciate for you being part of the Tradespoon TV. If you want to learn more about Dan's group, you can go to kkmarmorgroup.com, where you can learn more about what Dan and his partners are doing to hedge the volatility and take advantage of the volatility to grow your assets under management. And again, Dan, thanks a lot for being a part of our show, and we hope to bring you next week and soon after.
Sounds great. Thanks, Vlad.
Thanks, Dan. Appreciate your time. So thank you for being part of our volatility discussion and our tool time. My name is Vlad Karpel. I'm the founder of Tradespoon. You can see the recording of this show if you go to live TV in the Tradespoon site. And also, please review upcoming webinars page where you can see similar discussions and different educational content on our site. Thank you and have a great day and have a great week. We'll see you next week.